Hello there and welcome to FX Street Currencies in Play, brought to you in association with Royal Financial Trading. I'm joined by Mike Ingham, strategist at BGC Partners. How are you today, Michael?
I am well, Zachary.
Right, the highlight for me over the last 24 hours is euro dollar breezing through 113, which was a resistance level for quite some time.
Yeah.
Was that a surprise to you?
Yeah, to some extent, although, it's consistent with the theme that we've seen over the last 6 months, really, where you've had this rolling capitulation on the US reflation trade that's also been reflected in other asset classes such as equity. And also, on a real economic basis, the Eurozone, really the standout region globally in terms of performance. Of course, many, market commentators had, in and around the turn of the year, had said, look, parity is, only a matter of time until we go there. So they've really been thrown a loop. And, of course, many of these were proceeding from a position where they were structurally underweight anyway. If you look at the last decade, the euro has tended to be a structural underweight. And, of course, we know with the euro crisis 2011, 2012, you saw, euro weights being pared back even further. I mean, for instance, in central banks, you saw the amount of euro reserves, as a proportion of total, also come down. So really, they've been caught hot-footed. And another overlay to this, by the way, of course, is the fact that even though the Federal Reserve at the moment is being extremely aggressive in terms of what they're telegraphing to the market in terms of the rate hikes, also balance sheet reduction as well. I mean, looking at a relatively aggressive paring down of the $4.5 trillion Fed balance sheet, the market flatly doesn't believe them. And, of course, that's also helping to undermine the dollar against the euro.
Okay, let's have a look at the trending topics of the day on the currency markets. And dollar CAD sinks to 4-month lows. Dollar yen retains bid tone above 112, and then pound dollar regains poise. Eyes 128.60 ahead of Carney, so he's obviously speaking later today. Let's have a look at the pound on the live charting here. 128.20. We had the spike through to 128.60, but we seem to have backed off quite from that. Presumably, not much is going to happen until Mr. Carney speaks on that particular cross. Yeah. Another cross which is of interest to me is euro sterling, where I think we've seen months and weeks of the retail traders being short of this, and have a few glimmers of hope. But basically, it's been a one-way trip, hasn't it, from 83, 84 pence onwards.
Yeah, I'd be very interested to see Carney's next move, the sort of open mouth operation, as they say. Because, of course, it's been a bit of a roller coaster, and part of this is the fast that is forward guidance, a la Threadneedle Street. So we had that surprise 5-3 vote at the last MPC. We had Mark Carney trying to calm everybody's nerves, saying now is not the time for a rate hike. Shortly thereafter, and then Andy Haldane just wades in and just goes, well, actually, I might vote for a rate rise next time around. So, we went into this month with the market thinking there was maybe something like a 15% chance of a rate hike in the UK by the end of this year. That's now 46%, when I looked at it this morning, and over a 70% chance of a rate hike taking place by the end of next year. Now, one of the things which is quite interesting for me, at least, was the financial stability report out of the Bank of England, which was for me was extremely hawkish. And one of the things they did, for instance, was effectively tighten capital rules for the banks. They increased the counter-cyclical buffer. More of that to come later on in the year in November. And I'm wondering whether they are trying to do things to tighten monetary policy without actually changing the headline rate, and that may placate some of the members, such as Haldane, which seems to be a bit of a loose cannon on the MPC at the moment.
Okay, well, let's just check the price of euro dollar at the moment, 113.58, so maintaining most of its recent gains. And we'll talk to Michael Moran, who's a market analyst at Royal Financial Trading, about where he thinks the euro is going to go.
I'm very good, thank you. And yourself?
I'm feeling very buoyant and boisterous, a bit like the euro dollar at the moment. Has the move through 113 surprised you at all?
In a way, yes. But given what Draghi said last night, not really. I'm still skeptical about it at these levels currently.
But I mean, what would be the reason for that? Because obviously the Fed is sort of done its stuff as far as rate hikes so far, presumably without any visibility on any of the tax bazooka or the infrastructure situation. They can't really raise rates much more. And then obviously on the other side, you've got the Eurozone economy recovering, and really it's time to unwind the QE.
I think that's true. Yeah, we're looking further down the line, though, and I think this will take a little bit longer than the market expects. It always gets a little bit ahead of itself. Yeah, I think we've probably jumped a little bit too high without a decent correction, and it looks to me like the market's getting a little bit overstretched up here. On what Draghi said. He did temper it toward the end. I think he'll be very conscious moving forward about the actual level of the euro. So he'll be a little bit more careful to temper any upward pressure on the currency.
So strategy-wise, what would we be doing? We'd be fading the cross above 113 or 113.50, looking for some kind of test of support of the old resistance?
Exactly. I think 113.80. It touched there this morning to 114.10. Is probably a good sell level. You would probably look to put any stops if it gets above 114.60. Looking for a correction back down maybe to 111.80 and 112. The dollar move last night downwards was not really broad-based. It wasn't as even as one would like it to be in order for the euro to have a more healthy upward move. It actually rose against some other currencies. Okay, I mean, we can put the yen aside, but against maybe a lot of the emerging market currencies, the Aussie and the Kiwi, they didn't really gain much at the expense of the dollar. So I think that the dollar has to have, the weakness has to be a little bit more universal, more broad-based in order for the euro to have a more healthy uptrend.
And what would, I mean, let's say we just go straight through, 114, 115. I mean, is this, when would you change your outlook or your view on this cross?
I think if it gets above 115, you'd have to think about it at 114.60, 115. We're going back to 2015 levels. At 114.60, 70. I think that's the highs around in August 2015. The market positioning also is pretty long on the euro. The speculators probably paired some of their longs when the ECB came out a little over a week ago and left their policy unchanged. But the market is still a bit long. So if it fails to get much above and looks like it's going to turn around, I think we have a decent chance of correction. Mind you, as I said, further down the line, the ECB will probably start to taper and change its ultra-low interest rate policy.
Michael Moran, market analyst at Royal Financial Trading, thank you very much for joining us today.
You're very welcome. Have a good day.
Okay, let's move along to the trade of the day, which involves euro sterling. The cross I was looking at, we were looking at a few minutes ago. The euro maintains strong upward momentum as investors continue pouring in more funds after Draghi's speech. Buy euro sterling at 88.80, i.e. stopping yourself into this trade. Take profits at 89.45, stop loss at 88.40, and risk-reward ratio at 1.625. So looking for further momentum there, presumably in the wake of maybe Mr. Carney this afternoon. Moving along, we have today's trading positions where people are short up to the eyeballs of euro dollar, which has got to hurt a bit. More level pegging on pound dollar and also euro dollar. Short, obviously, in dollar Swiss, which seems to be a permanent fixture, and buying into that dip of US dollar and the Canadian dollar there towards 130, 50-50 on Aussie dollar, and then very short on euro sterling. So maybe not the way to go at the moment. And then we go on to today's economic calendar, which is 1:30 GMT or 2:30 in new money. Bank of England Governor Carney speaking again, trying to maintain his position. Bank of Japan Governor Kuroda speaking as well. ECB's Draghi again, and the Bank of Canada's Governor Polotz as well. So they've got a bit of a problem in Canada at the moment, haven't they? With the
housing market.
Housing market, yeah.
Yeah, one might say, Zach, that this kind of happened on Carney's watch, and he kind of left for a massive pay rise in where was it? Yeah, Bank of England. Yeah, just before it all blew up.
Right, so we're probably looking at the same thing to happen a year or two after he leaves here as well.
I mean, I think that's the only area in which he's likely to prove consistent.
Is that forward guidance of some kind?
It's my forward guide. It's called a forecast. Everybody else calls it a forecast, but it's financial stability for all. There's some very interesting charts in there. Which
Mike Ingram, strategist of EGC Partners. Thank you very much. That's it for today's FX Street Currencies in Play, brought to you by Royal Financial Trading, and obviously share this segment on social media if you can.